I'm Nikita Rana and this is Daily Dope on Tech 2. The Flipkart-Walmart deal is so popular with Indian journalists. We're hearing a whole lot of statements. One that, the Indian government and Indian policies killed Indian entrepreneurship, by not extending enough tax benefits, by not letting them list in the United States without doing an Indian IPO, and the poor Bansal boys had to go to Singapore to form a company to bring in foreign direct investment. Then now people are saying, Walmart shareholders are going to get upset with the company because Flipkart's losses are going to become its own. Walmart's entry in Indian e-com in the long term doesn't seem to be bad for Walmart as a whole and for its stock price in the long term. Also, it's going to be good, I think, for Indian consumers. Because if you look at the numbers and you see that, if Flipkart is valued at $20 billion today and the Indian e-com market is going to be a $200 billion market by 2025, if Walmart is able to retain Flipkart's current share of 40%, it could be an $80 billion company in 2025. Now, if you look at what India MD of Google, Rajan Anandan, has said, he has said that, India is currently at $1,700 GDP per capita. And this number could go up to $4,000 GDP per capita in 2025, which means disposable income of Indians could really increase in the next 7 years, which means that companies which are investing in Indian e-com, manufacturing and other stuff in India could be hugely profitable if these estimates turn out to be true. Now, this is a slightly tangential example, but I still think it makes sense. Now, for instance, if you look at the iPhone SE, it was priced at 40,000 rupees in 2016, and the import duty on this product was very high. If you look at the price now, it's close to 25,000 and 27,000 rupees in India. I mean, right now, if you check, there's a sale going on Amazon and Flipkart, so it's close to 19,000. But the actual price is between that, 25K and 27K. And why did this happen? This happened because Apple realized that this is one product that could sell in India in larger numbers, but it won't if they continue to just export it to the Indian market. And finally, when the government did kind of arm twist them into setting up that manufacturing assembly plant in Bangalore, prices did come down. The phone went from 40K in 2016 to 25K in 2017. That initial blip was, of course, because the price had just artificially been brought down. The setup in Bangalore wasn't ready then, but consumers in the long term have gained because of that. And while it is true that the Indian economy is at the moment open to a whole lot of foreign investment, foreign goods, services, Chinese goods, tech companies coming and setting up, putting in a lot of money here. But that doesn't necessarily mean that it's bad for Indian entrepreneurship and bad for Indian consumers. Because it seems to me that while the government is doing that, it is also supporting a move that will increase manufacturing and understanding and design of products which are higher price. So sure, small retailers and where much skill isn't required will not be able to fight Chinese manufacturing at those prices, but slowly if we build skills and use foreign investments to set up these firms and these factories and develop these skills, in the long term we may be better off. That's it from me. Thanks for watching.